Hello, dear friends. We will see how to solve problems on inter-process profit. So we'll go straight to the problem. So we will see this question. A product passes through three processes to completion. These processes are known as A, B, and C. The output of each process is charged to the next process at a price calculated to give a profit of 20% on the transfer price. The output of process C is charged to finished stock on a similar basis. There was no partly finished work in progress in any process on December 31st, on which date the following information was obtained. So they have given you materials in process 1, 4,000, labor 6,000, and closing stock 31st December 2000. Similarly, process B 6,000, 4,000, 4,000, process C 2,000, 8,000, and 6,000. So what they are saying, there was no stock in hand on 1st Jan and the overheads were ignored. No overheads. Of the goods passed into finished stock, rupees 4,000 remained in hand on 31st December, and the balance has been sold for rupees 36,000. They are asking you to prepare the process account and calculate the unrealized profit. So first one, we will understand what is inter-process profit. We will understand what is inter-process profit. So first one, what is inter-process profit? We will understand. Or the transfer profit. When the output from one process is transferred to the next process at the cost of production plus a predetermined margin of profit. That is, cost price plus some amount of profit is added, and this is transferred to the next process. So when the output of one process is transferred to the next process at the cost of production plus a predetermined margin of profit or at market price, there arises inter-process profit. So this is known as the profit which is added will be called as the inter-process profit. So you know that in process costing, there are different processes, say process A, and you have process B. So the output of one process, if it is transferred to the next process, not at cost, but cost plus some amount of profit, then it is known as there arises inter-process profit. Okay, so inter-process profit is the profit earned by process when it sells goods or services to another process within the same company. So one process in the one goods from one process is transferred to the next process at a loaded price, then arises the transfer inter-process profit. So the purpose of inter-process profit, why do we have this inter-process profit? Why do we transfer the goods at the loaded price? What is the reason? The purpose of inter-process profit is to measure the efficiency of each department and also to compare costs with the market price at each stage of production. Each stage of production. Okay, when the output of one process is transferred to another process and finally finished stock account at transfer price. So what happens is your closing stock will be at the transfer price or at the loaded price. That is, cost plus some amount of profit will be included in the closing stock. And you know, as per the accounting standard, stock should be valued at cost or net realizable value, whichever is lower. Therefore, here what happens is you have added some amount of profit and that profit is not realized. So to bring it to when you want to prepare the financial final accounts, you have to exclude the profit which is included in the inventory. So there's some item called as unrealized profit, which is included in the inventories. So unrealized profit has to be excluded and we have to take the cost while preparing the financial statements. Okay, so this is just the some information about theory. So now we will go straight to the problem. So in the problem, you know that process A, material incurred is 4,000, labor is 6,000, is 6,000, stock 31st December is 2,000. So now what do we do? We know that the goods are transferred to the next process at 20% on the transfer price, 20% on the transfer price. So what we must do, let the transfer price be rupees 100. So if you take the transfer price, so I'll write here transfer price, I'll write here the profit, and I will write here cost price. So if the transfer price is rupees 100, you will be adding 20 rupees, where 20 rupees will be your profit, because profit is on the transfer price and not on the cost. So if you want to determine the cost price, you know 100 minus 20 is 80. So 80 rupees is the cost price. So if you want to find out what is the profit on cost, if you want to find out profit on cost, it will be 20 over 80. This multiplied by 100% will give you the percentage, which is 25%. So it is 25% on cost. So what they have given you is the profit on the transfer price. We can convert this into profit on cost, and profit on cost is 25%. So we will now start working out the process account. So the first process account we will prepare like this. We will write what is the cost incurred. There is no opening stock. Material is 4,000. Labor is 6,000. So the total is 10,000. There are no profits included, so profit is 0. So this will become the total as well. Now closing stock is given in the question. What is the closing stock? Closing stock is um, closing stock is 2,000. Therefore, 2,000 I will retain at cost. So here also 2,000. So what happens? It is 8,000. 8,000 is the value of goods transferred to the next process. So value of goods transferred to the next process is 8,000. But you will be transferring it at a loaded price. And what is the loading? They say 25% or 20% on transfer price, which is nothing but 25% on cost. We have already computed how 25% on cost. So 8,000 into 25%, this will be added. So what is the value of goods which is transferred? Cost to the company is 8,000. Profit included in this particular process is 2,000. So transfer price is 10,000. So with this, the process A account is done. Moving on to process B. So what is process B? It is first one, it receives goods from the previous process, that is process A. So this is the input for this particular process. The output of process A becomes the input for process B. And it incurs expenditure, material 6,000, labor 4,000. Therefore, what is the total? The total is the total is 18,000 is the cost to the company, but cost to this particular process is 20,000. Remember, the 10,000 is the cost to this particular process. This 8,000 is the cost to the company. 10,000 is the cost to process B account. Okay, and it incurs 6,000 and 4,000 on processing. Now, what is the stock in this particular process? Stock is 4,000. So 4,000 is the closing stock. So write 4,000. Now you have to make one small computer calculation. You have to find out what is the profit which is included in this. So what I'm going to say is, if the cost is 20,000, profit is 2. So I'm going to do one small calculation. But 20,000 means profit is 2,000. 4,000 means how much? So you know it. This is 10% of this, so this will be 400. So if you want to know what is the cost price, it is 4,000 minus 400. You will get 3,600. So 3,600 is the closing stock to the company. Do you understand? For this particular process, closing stock is 4,000, which is at the transfer price. So if you want to find out what is the value of goods which is passed on to the next process, cost is 14,400. And 16,000 is the cost to this particular process. And the profit so far added from the previous process is 1,600. But cost to this particular process is 16,000. You know that it transfers the goods to the next process at the loaded price. And what is the loaded price? It is 25% on cost. So what is the cost to this particular process? It is 16,000. So 16 into 25%. So this is the loaded price. So when you are writing it here, cost to the company is 4,500, 4,400. Profit so far included in the stock is 5,600, and the value at which it is transferred to the next process is 16,000. So with this, process to account is completed, and now we move on to the next one. So here, sorry, this should be the total 4,000. So this will become 20. So 20,000 is the transfer price. 5,600 is the profit added by process A and also process B. And the cost to the company so far is 14,400. So the cost price of the goods which is passed on to process C is 14,400, on which process A and process B have added some amount of profit, that is inter-process profit, 5,600. So now 20,000 becomes the cost for this particular process. That is C. Process C, the cost will be 20,000. Again, C also incurs some expenditure. So what are the expenses incurred? 2,000 and 8,000. So material 2,000, labor is 8,000. So what is the total? What is the total? So total is 30,000. So 30,000 is the cost to this particular department. But then the entire 30,000 is not transferred to the finished stock account. How much they are transferring? They are transferring, they are retaining 6,000 because 6,000 is the closing stock. So 6,000 is retained in this particular process. So what is the profit that is included here? So same computation you have to do. If it is 30,000, profit included is 5,600. 6,000 means how much? So it'll be 5,600 into 6,000 divided by 30,000. So 5,600 into 6,000 divided by 30,000 is 1,120. 1,120. So what is the cost? It is 6,000 minus 1,140 will give you 4,880. So if you want to know, this is the value of stock that you have calculated. If you want to know what is the value which is passed on to the next process, stock is 19,520 at cost. But if you see what is the profit included is 4,480 from the previous two processes, that is A and B. This process has not added the profit yet. So now this process will also add the profit. How much is the profit? It is 24,000 into 25%. So when it adds that amount, it becomes 30,000. So this is the transfer price, 30,000. The profit so far added, this process has added 6,000 profit. And the total profits added by process A, process B, and process C to all together will be 10,480, and the cost price is 19,520. So we will write it here 19,520. Profit is 10,480, and the value is 30,000. 30,000. So the debit side total, credit side total tallies. Now coming to the finished stock account. So finished stock account, this is the value of goods which has come in. There is no opening stock. And what is the closing stock in this particular um, in the finished goods? What is the closing stock of the goods passed to the finish into the finished stock? 4,000 remained in hand. So 4,000 is the closing stock. So I'll write here 4,000. So when I say 4,000, 4,000 is the cost to this particular um, process or the finished stock account. This is the cost. Now, what is the profit included? How do you compute? In the same manner, 30,000, 10,480 is the profit. 4,000 means how much? So 10,480 into 4,000 divided by 30,000, it is 1397. 1397 is the value. So what is the cost price? It is 4,000 minus 1937 will give you 2603. So if you want to find out what is the value of goods sold, cost of goods sold, it is the cost price, whatever the total minus the finished goods. Here also you minus it, you get 26,000. Okay, now please remember, this is the cost to this particular, that is finished goods also, this is the cost. Okay, but then what is your sales? By sales, how much? You sold goods for how much? You sold goods for 36,000. 36,000. You sold goods for 36,000. So 36,000. Cost is 16,917. So how much is the profit? This minus this is the profit. That means your gross profit is 10,000. So I repeat this one, sales is already given to you 36,000. Cost price, you know, the difference between the two is the profit. So the profit column has to tally. So this is the balancing figure. So gross profit is 10,000. Now, if you're preparing the financial statements, you need to know what is the unrealized profit included in the closing stock. So unrealized profit included in closing stock, how do you find out? So you know this is the closing stock, that is 2,000, and there's no profit here, 2,000. So this we can copy it and write it here. Unrealized profit included in process A, there is no profit because this particular process has not received goods from the previous process because this is the first process. So there is no unrealized profit included in the closing stock. Now, the second one is process B. Process B's closing stock, you know, it is 3,600 and the profit included is 400 and 4,000. So we'll write here 3,600 is the cost, profit is 400, 4,000. Similarly, what about process C? Process C, it is 4,880 is the cost, 1,220 is the profit, and the total is 6,000. Finished goods also in the same manner you can compute, you can take here. So if you want to know what is the unrealized profit included, you add only the profits. So you get, so there is no unrealized profit in process A. Process B, it's 400. Process C, it's 1120. Process finished goods account, it is 1397. Therefore, the total unrealized profit included in closing stock is 2917. Hope you have understood the computation. Thank you very much.